Good day. Good day, everybody. So, yesterday, I'm sure some of you have seen this guy before. His name's Zip Trader. He came out with a couple of stocks that he said might be good buys, and I actually follow most of these things, and it reminded me of a few things. So, I'll go over them right now. But before we do that, let's look at Hydrite. Hydrite's still at 3. I think again, I don't know. It could be in a consolidation phase right now. They have earnings tomorrow. I don't think that I don't know if they'll have a live earnings on that day or not, but if they do, I'll try to stream that, even though, more people probably follow their channel than me because I have no followers. So, but anyway, yeah, to go over a few of the things, let's take a look at which is the first guy. So about a few things, somewhat small positions, but um, where is it? I bought Shift 4. I bought a small amount of shares, about 200, and I've been following these guys for a while. I follow a lot of things. Just because I'm following them doesn't mean I'm going to buy them at any particular time, but I usually look to see when the price gets to the right spot. Our Qualcomm bet went well. I think the last video I talked about buying it. We bought it right around here, and I talked about how I should have bought it right around here, because that seemed like a good price entry. Although I most likely would have gotten it right here because that would have been the turnaround. But anyway, Qualcomm is really up a lot. I don't know why. They're doing their buyback and dividend. I think they're increasing their dividend and buyback, and there's speculation that OpenAI may be making a phone, and Qualcomm may be helping them with that, but I don't know. That's not confirmed. So, but yeah, overall a relatively green day, but uh, the two stocks we bought ended up being down today. We bought Shift 4. I think we're up a little bit on it. We bought it around 44. Where was it? I'll have to check. But so these guys, similar to dLocal, although they're not dLocal, but they handle payments and a couple catalysts. So the Zip Trader guy went over a few things with them. One of which was lots of insider buying, which is always a good sign. And these guys have been kind of destroyed during the whole SaaS apocalypse thing. They're actually making more money than they were back at this point, and they're down over 50% since then. Their forward price to earnings is 8, which is very, very low. They're near their 52-week low, which is about 39. And they've only have a market cap of 3.65 billion. So again, I'm not saying these guys are going to be the next, I don't know, whatever company you think is great. Not going to be the next Google or whoever, but much like dLocal, I think these guys are undervalued. And as any type of stability or growth happens in the world, they're going to keep making a little bit more money. I think there have been a couple channels that have been advising people to buy this or talking about this being a good stock for a while. If any of you guys follow Couch Investor, he is one of them. However, just because a stock or company is good, it does not mean it is the right time to get into something. I like to watch certain things unless they're absolutely generational companies. Like, it doesn't matter when you buy Amazon. Obviously, if you buy Amazon at 200, it's better than buying it at 250, but that's just the kind of stock you buy and then forget about. You don't even have to look at it. You just buy it and wait. So maybe that's bad advice for some people, but well, we can talk about Amazon later. But anyway, Shift 4 to me, it has been in a very long downward trend for quite a while, and we are kind of in this little range right here, like the 40 to the 50. It's been kind of bouncing around for a little while now, and it's been a long downward trend. But again, this is not a guarantee that it's going to come back. But Um, it's had a few breakouts past its 10 and 5. It's like it's trying to make a move. Going up, smack down. Going up, smacked down. It's doing that whole heartbeat pattern thing. Boom, bad couple days, tries to recover, kind of gets it, and then slow degradation. Tries to get out, and then comes back. So basically what this is a lot of buyers are really liking the stock, which is good. And there's a lot of sellers that are really not liking the stock and trying to get out. And uh, I don't know where all these sellers are coming from at these really low prices, but maybe it's the whole SaaS apocalypse thing everyone's talking about. This is a couple months here. Got February, March, and April. So boom, trying to get out, failed. Trying to get out, failed. Trying to get out, failed. But the you had this little dip right here, low, low, and we're kind of we have kind of gotten a lower high, but also a higher low. I don't know if this is the forever low. It might keep going down and break that pattern, but considering this is actually a good company, they're actually making money, growing revenue, and their forward price to earnings is 8. I'm happy to hold these guys for a few years at this price. I didn't want to get into them, you know, a year ago, 6 months ago, or whatever, especially during the downtrend. But this isn't the safest place to buy or the most opportune time because this could bounce around here for months. It could go lower. I don't know, but I like to get. I'm a little bit of a gambler. I like to get a nice price point, and if things recover, I'd like to get more money. So we could wait for this guy to, start an upward trend and get to the 60s, about the 50s, 60s. But at that point, it's kind of like the Qualcomm thing. We talked about this. Like, where are you, Qualcomm? So short term, yeah, this is a really interesting point to get it at. This very undervalued at this point, just as far as a value company with dividend and share buybacks. But I just asked PayPal. That doesn't mean that it's going to go up from there. But in this case, it did. But this would have been the perfect buy point. Or personally, if I was watching this right here, I mentioned it last time, this would have been the perfect buy point. The company, in a sense, hasn't changed at all from here to here, but this is just a sign that, and just because this happens doesn't mean it's a guarantee, but this is like breaking through the 5-day and the 20-day with the 5 crossing over the 10 shows a short-term trend of like, all right, this at least is going up in the short term, a little bit of a pullback and weakness, and then boom, boom, boom. So, yeah, I think we got into it right around here. Again, this is definitely a good sign. Not a bad place to buy. This is more of the certainty buy, but I should have bought it right here because I don't know. I follow a lot of things and it's hard to keep track of them. But anyway, going back to Shift 4. Again, I can't summarize these guys perfectly as some other people will, but they handle transactions and payments. They're fully integrated. They have licensing agreements with their software. They're making good money. Oh, let's look at their analysis chart. So forward price to earnings of 8. Revenue is growing. EPS, it says it's down. These numbers are not always accurate, but the big thing I like to look at is forward price to earnings, the size of the company, and like historical prices. Like, I don't know if these guys will go up eventually forever and stay up, but these guys will go down, they will go up, they will go down, up, down, up, up, down, up, down. We're at like historical 5-year lows. They're making more money than they were back here, and back here. It's I don't know. It looks like their net income is suffering, and this doesn't seem accurate to me because the information that I just saw says that their information or that their income is actually going up very well. So, sorry, not their information. Their earnings and income is going up. I don't know why this, and I probably shouldn't use this site anymore because it's not exactly up to date, but oh, wait a minute. Do I already have? Let me see. Yeah, so their gross revenue for 2025 says it's 3.1 billion, revenue growth of 25%, and their EBITDA was 950 million. Their earnings growth is supposed to be about 35% and 32% in 2026 and 2027. And gross revenue going from 3.7 billion to 4.4 billion in 2027. So they should be growing. I mean, not like massive growth, but they're definitely not shrinking. So yeah, we're looking at 50% revenue growth for 2 years. That is not bad. So yeah, I don't know. I don't know why they've been struggling so much recently. I mean, the sector is struggling overall, but lots of good catalysts. The general targets is between $80 to $100 by the end of 2027, 125 to 150 in 2 years. They're trying to integrate some European acquisitions. And have a lot of stuff in the blender that should be making their stock go well. And this is even just like a value play. It's a growth play. Hopefully they do all right. What else do we buy? So we did buy some service now. Again, this is a stock that's been kind of in the news a bit. Great numbers, good earnings. I personally think that they have actually been undervalued or overvalued, sorry, for a while. Let me just see. So yeah, their forward PE is at 20, and I know that the PE, it can be a good metric for certain things, but it depends on the industry. Like, I don't know. Let's look at Reddit. All right, that's not a good example. What was I thinking of? Oh yeah, our favorite thing. Nebius, price to earnings of 340. Ridiculously overvalued. Absolutely ridiculously overvalued. But the reason it's up there is because people expect it to grow into the valuation. Things that are growing less get less of a valuation. So ServiceNow, if everyone thinks software is dead, these guys actually have pretty great numbers. They did not have great numbers a year ago based on their price. I mean, they were growing well, but trust me, definitely overvalued. Overvalued at this point, at least in my opinion. So, yeah, it depends on the sector and whatnot, but I did get 100 shares of these guys. I've been watching it for. I haven't been watching it in a sense for a long time, and I haven't been watching it for a long time because they weren't on my radar. They came into the radar during the SaaS apocalypse thing when they went down to the hundreds. And we were just watching, going, what's going on with this? All right, I'll just follow it for a bit. And after doing some more research, I don't know. These guys made $13 billion in 2025. They're projected to make $16 billion this year. Rough numbers. Revenue from subscriptions is going from 12.4 billion to 15.4 billion. Free cash flow going up, EPS going up. They have an AI revenue division. well, not an AI revenue division. They have an AI services division that is, they keep raising the revenue for, or the projections for. It's up 50%. Their guidance for it is up 50%. Again, I'm not saying these guys are gonna be the next Palantir, Google, whoever, whatever, but a lot of companies are good, and their price is their price can be pretty wild. So I look at these guys, looking at like 4 years ago. These guys were in the 70s and 80s, and good growth in their company, going up a lot. Big dip, of course, during the Liberation Day tariff stuff. Big up again, and then bam, just AI is like, all right, software is disappearing. So I don't think software is disappearing. I think that, like a lot of things, the industry will change, but a lot of the existing tools can be incorporated or used. AI may use existing software as a tool itself. So, again, no bet is absolutely perfect, but as I look at this chart, I'm like, all right, this company's growing pretty well. They have great earnings, great revenue, good prospects. Seem to be building their own AI tools. I don't see them, again, who knows what could happen, but these guys are growing much more than PayPal, as an example. And yeah, I don't know what price we're going to be looking at, but I'm definitely comfortable holding these guys for a couple years. You know, if they get up to the 200 range, depending on what things are looking like and their valuation, I may just cash out and be like, all right, that was a good trade. I don't know if this is a forever stock, but it's definitely a good one in the short term for me. What else did we buy? Where are you? Did I put you down here? Reddit. I did not buy Reddit. What I did do with Reddit is I bought a call option, a short-term call option, 1 month out. And I did this because they have earnings this afternoon. Although it looks like earnings aren't out already, are they? When do you report? They report in the afternoon. Okay, yeah, they report at 1:06, supposedly. So, yeah, they're reporting this afternoon, and I learned a little bit about Reddit and this is kind of the thing, like I'm sure we've all been following Bloom Energy. I've been following these guys for a while, but not really following them. I just kind of put them on the radar to watch them because it was like a meme stock back in the day, but I never did any research on them. These guys make basically portable power, like portable power generation for AI data centers, allowing them to be powered without needing to be hooked up to the grid. That is one of the main factors in data center bottlenecks, is power. So these guys are basically able to bypass grid connection and provide power. I can't buy them now because, you know, that's long term. Obviously, these companies are probably going to want to get connected to the grid and get other types of power. But short term, these guys were a great play. You know, that's a 10x in a year, 30 to 300, perfect. Yeah. Anyway, I've been following Reddit for a while, but I have not really done a deep dive or research into how they made their money. I saw it was like ads, and I was like, oh, who gives a shit about Reddit? But what I found out, and this made sense from Zip's video, basically they've got decades of human conversations and interactions about many, like thousands of topics, millions of threads of conversation, and they sell that to Google and OpenAI. They've got licensing agreement to use the conversations as they've monetized the data. The data basically is just literally people talking on their site. People talk on their site and they sell that data, which I did not know. And they've got a lot of other revenue as far as ad and various other things, but it's just their whole. Let me see if I can. Got now. I just kind of did a little bit of a copy on this thing, but so um, they have better margins than Meta and Google with their advertising profitability. 20 years of real human conversations, already licensing to Google and OpenAI, recurring revenue every time a new model gets trained. So they've basically got this massive amount of data they can continually resell. And I think those customers will only grow. Very fast advertising acceleration and the engagement with their people, they continually get more and more users. Then finally, they're doing a buyback of 1 billion shares. Or sorry, $1 billion. Let me see what their market cap is. We basically went over Reddit went over ServiceNow. They're fine or whatever, but yeah, let's do Reddit. A billion. So their market cap is 28 billion. They are planning to buy back. What is that? What is one of that? Is that 4%? It's a little under 4% of their market cap being bought back. With their growth right now, again, I feel like I should buy these guys and actually get stock. The problem is I don't actually have the money. And these guys are probably a better investment than Now and Shift 4. But the problem is with Shift 4, those guys are still growing. They're still undervalued. And those are guys of a much better price point. Reddit is still technically, I mean, they're growing pretty nicely. They got great financials. And I don't know, maybe they are just a better buy. I just don't have the money to really buy any meaningful amount of shares. Whatever money I had went into Shift 4 and ServiceNow. And again, those were relatively small positions to most people. In the past, I would have bought a smaller amount of shares, like 50 shares, but after learning about selling calls and option stuff, I try to get blocks of 100 shares so that as things pop up, I can sell calls. But anyway, that's yeah. Reddit has a very interesting story. Very interesting story. And they are reporting earnings tonight, and that's actually one of the things that I've been following with them. I actually bought call options on them right around here. Like right around here. They went up good, and then they started to go down and consolidate. And I had these were 3 months out. You know, these were I think they expired in, I forget when. It was September or October, but so they were doing well, and then they started to degrade and consolidate, and the price started to go down. So I ended up getting out of them. I might have made a little bit of money, but I had a fair amount of call options on it. And again, had I hold, this is something that I've remembered for a while. Had I held, I don't know if it would have been life changing, but I would have made a good amount of money. You know, when you own 400 shares and it goes up almost, $200. What is 200 times 4 or 5 options? That's, I don't know, that would have been close to 100 grand maybe. Close to 100 grand in profit had I sold at the right time. And maybe I would have probably sold right around here when it was just up. It's like, oh, it's correcting. I might have sold there. Who knows what I would have done? But I've always remembered that with Reddit. It's like, well, why is Reddit doing this? And I never really researched them. I was kind of trying to use them as a trade, strictly a technical trade. And from a technical standpoint, I think we're in a good place for Reddit. It did this kind of thing before its earnings over here, where it was consolidating, went up a little bit. We were consolidating, went up a little bit, and then had a little dip, having a little dip right now. Had another earnings, I think, right here, and not much happened right there, although it did go up eventually. But I guess bad earnings right there. But I'm feeling a lot more confident about this one. I did not buy a ton. I just bought one option. And I bought that with the intention of if Reddit goes up a bunch, I'm either just going to sell it or I'm going to try to let the shares get purchased. I'm going to try to let the call exercise cash out of things if it goes up a lot and maybe hold on to it because if these guys continue their growth, they're going to be pretty big. So, final thing. Fucking Synergy. Let me just see. So I ended up buying these guys around 80 cents. It was on one of these 2 days. Either it dipped or went down. I bought it 80 cents, and then I held it until it went down into the 60-cent range, and I was like, you know what? This isn't looking good. Synergy, we've got 2 weeks till their earnings, and they are going down every day. I mean, just bleeding out. I wouldn't say this is a falling knife. I'd say this is sepsis, where it's just like this infection that just keeps growing, dying. Now, there's a couple reasons why I actually bought 5,000 shares today at, where did I buy it? I bought it around 31 cents. So I think I bought it right here or right here. Again, of course, I mean, like I probably, their earnings are in 2 weeks. Part of me is thinking, I just wait a few weeks and buy it. It might go down to whatever, but for 5,000 shares, this stock could potentially go up to $6 to $7 by the end of the year. If their beverage turnaround shows promise in May, which is May 14th, I think is their earnings date, and if they can show, all right, let me look at this real quick. These guys are a $3 million company now, and their revenue was $30 million at one point a year ago. These guys are hemorrhaging money, but they should have revenue coming in and show evidence of that in the next in the next 2 weeks. Let me just see. Okay. I'm looking at my notes right here. Okay. All right, so they have actually rolled out in Canada in Walmart and McKesson or however you call it. They have 4 different products for Walmart and McKesson. They are in 1,600 stores beginning in April. They're eyeing $20 million in Avenue revenue for the beverage, but hoping to lift the total company revenue to $55 million by year end. Those are the projections, 20 to 55 million. They are basically priced for bankruptcy. And if we look at the value of their company, they are just, there's no, I don't know. There are people that could actually just buy the float of this right now. Like if I was a billionaire, it'd probably be irresponsible. But if I had like $10 billion, I'd probably just buy this company. I'd probably just buy their market cap. It's like, hey, put $3 million. I'd call them and be like, hey, let me buy, 50% of your company. Here's some cash. And as this improves and whatnot, I get options or whatever the hell I would want. But it's yeah, these guys are worth $3 million. This is the smallest company that's publicly traded I've ever seen. I've owned real estate that costs more than this. And again, this is obviously not a guaranteed thing by any means. This is pretty freaking risky. And there's a lot of other factors where even if they roll out their beverage to these places, if their sales are poor, then they will probably fall apart. They have a unused shelf offering where if their stock goes up a bunch, or if it doesn't go up a bunch, they can basically they have the right to dilute by, I think, $100 million, which if you look at their price, I mean that like, I don't know, this just because they have the right to do something doesn't mean they will, but if they make good money and good revenue, they will either have a choice to either dilute to pay off debt, get some money, or they'll just hold the course, build up their cash reserves, and fortify their books with their revenue. I don't know. I don't know what they're going to do, but it's got a price to sales ratio of less than 0.3 right now. These guys have a forward PE of 2. Like, if anything goes well with this company, if anything goes well, their revenue, if the revenue stabilizes, if they get profit, whatever happens, it's just, they will recover. I'm not saying they will cover to 6, but this is the general price target. And the reason for that is because it is that represents a 1.7 price to sales multiple if they get to 55 million. So that's kind of it's literally just math. The projections by the analysts are if this rollout works and their revenue goals are reached and the company is priced fairly based on their sales, they should be around $6. That is a huge gain. Now I'm not going to put, $10,000 in here and hope to make 10 grand. Sorry, hope to make 200 grand. But I bought 5,000 shares at 31 cents. So I've already lost money. I actually had a price order. When I went down to here and here, I had a price order for 30 cents. And, I was just kind of waiting on it. And then, of course, my weird fear FOMO hit in. I was like, let's just raise it to 31 cents. It's literally an extra $50. I was quibbling over $50 as far as 5,000 shares. So, but I should have just had faith in myself and saved that $50. But I don't know. They've had these little turnarounds before with this little yellow bars of decreasing selling volume. We might be getting into a little turnaround right here. We might not. These have happened before, but it just keeps going down. Keeps going down. This is we were 2 weeks from earnings. We were literally 2 weeks from earnings, and then we got another 3 months for the next earnings. If their projections and their call or whatever it is they do goes well, this thing could pop pretty strongly. I was in Hydrite at 100 million. That is a small company. These guys, I don't know. I know friends, I know people that could buy this company outright based on its valuation. And these people aren't fabulously wealthy. I mean, having a couple $1 million is definitely good. But I mean, compared to the people that, buy billions of dollars worth of stock, I mean, like a couple million isn't a lot compared to those guys. But, I'm rambling again. What I'm saying is these guys are very, very small. Very, very small. Anything, in my opinion, positive. Any positive catalysts, any good growth numbers, any good projections. These guys are literally at their bottom of their 52-week range. It could get cheaper. It could go to zero. Terrible things could happen. But as far as bets, it is not a bad bet. It is not a bad bet. We're not waiting for them to get their partnerships in the stores. They have the partnerships. They have the beverages manufactured. They are out in the stores trying to get sales this month. We're going to have projections. We got a couple months after this. I'm not saying to buy right now. I'm saying that I bought right now. If these guys go down more, in the next 2 weeks and they have a good earnings, that's okay. If they stay the same and the earnings are bad and this goes down more, I don't know. It's not a lot of money to lose. It's a lot of money to me. It's a lot of money to some people too, but I don't know. I spent $8,000 on Shift 4. Spent $8,000 on ServiceNow. Spending $1,500 on these guys. I guess I'm not a super degenerate gambler. But anyway, that's the crazy one we're getting into. Disappointed in Poet. Made a bunch of money on paper, lost most of it. I actually ended up getting out. My cost base was about $6. I got out of all my positions around, I think, $8. And yeah, it's just should have sold up there. I don't know, you never know. Just because a stock is getting pumped up by people doesn't mean it's bad. I mean, a lot of great stocks. I mean, Amazon, Google, Oracle, a lot of good companies get talked about and pumped up and being like, hey, we should buy this. So sometimes it's good. Palantir was like that. There were people who were following Palantir for forever. Hood. Mara, you're having a good day. Are we having a little turnaround? You were overbought. Still going red. Huh. Mara doing? I don't know. I'm in Zeta. We're looking at their earnings tonight too. Well, I'll be looking at it privately. I'm not going to stream it, but if anybody ever wanted to watch it live, and it'd be like one person in the chat being like, "Hey, it's me, your one viewer." It'd be funny. I am considering selling Rocket Lab. Oh, Sprouts. I had call options on these guys right around here, and I ended up getting out of them. It was a break-even situation because we made money, and then the theta decay. But they were like it was a leap. There were some leap calls on it, and the theta was pretty low because they'd been stable and going down. So, but it looks like they're actually having a good recovery. Looks like they're having a good recovery, but I sold them and got into better things, I think. I sold the options. So, and I did get into SoFi at one point, lower price. I got out of it at a higher price, 19. SoFi is a great company. It's a great bank, but that's the problem is it is a bank and it is overvalued about 4 times by a lot of banking metrics. If you take out the technology side of it, it's about 4 times overvalued. Yeah, they got good growth, but that's why it just doesn't. It's pretty overvalued, and I don't want to be those guys that poops on everything. But these metrics for a bank are very overvalued. It has great numbers, and holding it now and having it, I mean, it may pump up again. It may be, and you go through 3 or 4 more earnings of strong growth. It could be good. Problem is, there's a lot of private credit concerns and uncertainty with interest rates, uncertainty with oil and other financial metrics. This is just not a strong sector. So, great company, doing great numbers, but I can't own them right now. I got to be in some other things. So, anything else that we need to go over? Still waiting for Iran to break out. This has just been a massive consolidation. I hear talk that they are one of the prime candidates to be purchased by a company like Amazon or Google, basically buying their land, buying their GPUs, buying their data centers, buying their power, and then having that company be the arm of their data center building. So we're just waiting for news on these guys. If this thing pumps again to 80 or 90, I'm going to sell a lot of calls on them. I think because most of my entry points is in like the 17 to 30, right up here. So it's the longer this goes and stabilizes, the more opportunity cost we lose. What else are we looking at? I would let ASTS get called away. God, why did I sell Marvell? No, we're waiting for Zeta today, and then we're gonna hope that Now and Shift 4 get their stuff together. It was a good day to buy because it's a green day and these guys are down. Is Palantir down too? Palantir is not down. They are, well, they might as well be down there. They're having earnings next week. I did have a call sold on them and bought it back for about a 30% profit, but I don't know. These are another guys that have to really blast through numbers. Really have to blast through numbers. What's their 4P 100? That is not too bad. I mean, it's pretty rough, but yeah, if these guys are the difference between these is they're profitable. So they're growing crazy, but they are profitable. They are growing earnings, growing income, growing revenue. You know, in a year, if they keep doubling their revenue, you know, in 2 years their revenue goes up to 12 billion. Their net income goes up to 4 billion. I don't know where your forward price to earnings, like they double their revenue from here, double their earnings, your PE goes down to 50. You double it again the next year, it goes down to 25, and that's getting close to fair value. So I don't know. I don't know what to think about Palantir, but it's they keep growing. They keep growing fast. They've got a pretty bright future. All right, I'll stop rambling. I don't know how long this thing's been going on. 42 minutes. Fuck. I'm worse than Jeremy. Yeah. All right, guys. We'll let this one go, and we may do a stream for Hydrite's earnings just to practice. Someday I should get a webcam so people can see how beautiful I am, but that's down the road.